Yes, legends, welcome back to the channel as always, guys. MDX Crypto here with another trading video, guys. In today's video, as you can see in the title, I'm actually going to go through four or five proven trading strategies you can implement to make gains in any given market, guys. Indices, equities, cryptocurrencies, commodities, you name it. Also, guys, I'm going to go through indicators to use to help you with these strategies. I'm going to show you how to use a lot of these strategies together in confluence with each other. I'm going to show you the best exchanges to use in crypto markets and traditional markets as well, and basically give you an overview of about 5 different strategies which I've been using, guys, for the best part of 7 years now, whether it's in equity markets or whether it's in cryptocurrency markets. So I'm going to go through these strategies. And also, guys, in the comments below, I'm going to make this really quick. I'm going to get straight into the video, but in the comments below, guys, put a trading strategy that you use, which you make gains out of, because when people come and watch this video, they'll probably look at the comments and go through other strategies. Okay, so let's dive into it, guys. I don't want to fanny around with this. I want to get straight into it. So the first strategy you can use, guys, is a SR, support and resistance strategy in trading markets. Now, I'm going to use Bitcoin, guys, as the ticker, you know, the price action, the PA for this video specifically, because I actually trade a lot of cryptocurrencies nowadays, and also it's traded so much today. The liquidity is massive, and it's a 24/7, 24-hour market. So as you can see on this chart, guys, you can actually see loads of lines, all right? So support and resistance is very, very simple. What you're actually doing, guys, you're basically like tracing out or marking out where previous support and resistance was, SR flips, on the price action. So let's first start by basically identifying where resistance is, guys. How do you identify where resistance is? Now, you can see here, very simply, guys, that the price has come up, the price of Bitcoin rallied up, guys, and then you see a wick and you see a stop in the price action. This is basically, guys, where resistance came in January last year. We saw resistance, guys, when Bitcoin hit this area here, the price didn't go any further and came back down. That's called resistance, guys, where the price action can't get above that. I'll show you how to identify that in a second as well. 1 second. I'll show you how to identify in another way where resistance as well. But very clearly, guys, on the price action, you can see resistance was placed here. I put a line on the chart, and actually this January high here, guys, is actually the mid-range. This is actually the middle of this massive, basically almost a 1.5 year range now Bitcoin's been in, going sideways within this, you know, could call it a channel, a range, whatever, going sideways. So it's basically consolidation. Now, as you can see here, guys, when we hit this January high here, this was resistance. We actually came back down, guys, and then we found support where price action stopped on the way down. And again, I drew a line here, guys, and actually this previous support region when we ended up in January did actually dictate where the price of Bitcoin came several months later to find support again. So commonly, guys, with SR strategies, you see that previous resistance turns support and previous support turns to resistance. And it's basically a way of identifying where you're going to see buyers or sellers stepping into the market, meaning, i.e., you can then place a trade, or you can place a position with the majority to catch whether it was going to go to resistance and back down or to support and back up, playing the bounce card on either side. So it's a very simple strategy, guys. I actually do play out, you could call it like a bounce support strategy on the way down in bull markets. That's actually one of my most I would say that's one of my most profitable strategies I've actually played out, playing a day trading or up to maybe a medium-term swing trading strategy, okay? So buying the previous levels, guys, just came in. You can identify support and resistance as well, guys, by using something called the VPVR. What you can see on the screen right now, guys, is something called the VPVR, and actually this will identify where volume has come in on a price level scale, not a time scale, okay? So normal volume, what people use is where, you know, where's the volume coming in terms of time? So was it on January the 15th? Was it on November the 10th? Whatever. But what the VPVR does, what the session volume does, it shows you where the volume comes in terms of price, okay? Where are the order blocks? Where is the majority of the buyers and sellers laddering up their orders, or previously, where did the buyers or sellers take place? And usually what you find, guys, in order books is where there's a lot of action, okay, a lot of sell pressure coming in, you have a lot of orders, okay? Orders equate for buying and selling. You need people to be basically saying, I want to buy this price, I want to sell this price. And the more orders you get in a certain area means the higher the liquidity is in that area, meaning that potentially the chance of hitting support or hitting resistance is, okay? So for instance, a good example is the market rallies up, it's then found resistance here. When you come back up to it, guys, to resistance, guess what? The market actually did find resistance on similar levels it did before, because there were order blocks there of sellers, okay? So that is basically, in essence, a support and an SR strategy, which I actually do use predominantly in my trading strategy a lot, actually. And then you can actually encompass the strategy, I would say the SR strategy, you know, none of these things are perfect alone. What you want to start doing is using other strategies as well in confluence with your already, say, the trading strategy which you find most profitable for yourself. So I'm going to go into the next one right now. So another trading strategy which which I do use and which is actually commonly used as well, is basically an EMA or SMA moving average strategy, guys. Now, very, very simple in essence. All you're doing is, guys, you're using the average price, it's basically giving you the average price of the market over a specific number of days, weeks, or months. So you can use a 21-week moving average, a 34-week moving average, you can use a 20 to 200-day moving average. All it's doing, you guys, these lines are giving you an average of the price action over a specific time frame. Okay, so really, really simple, guys, but actually very powerful if you use EMA and MA crosses. Okay, and generally speaking, guys, I'm just going to give you a tip on the best moving averages to use, which I use in my strategy on all types of time frames. Okay, so I just want to basically cut this quite clean, because there's so many moving averages out there, and there's so many people, so many different people that have their own ideas of what they think is good, you know. And I would say that generally speaking, the 200-day moving average is a good barometer of a bull or bear cycle. But I would just want to tell you what I think's good and kind of cut to the chase on this. So I believe that using moving average strategies, you should be using Fibonacci retracement numbers or Fibonacci sequence numbers, okay? And what I use in my strategy, guys, is a strategy which basically encompasses the 21 exponential moving average, the 34 exponential moving average, and the 55 exponential moving average. The reason I use these numbers, guys, is because these are Fibonacci sequence numbers, which come up in a lot in nature, and basically it's a mathematical kind of spectrum of numbers which come up a lot in lots of different things, guys. I won't go into that right now, because we all know that Fibonacci sequences come up in all areas of nature. But the good thing is, guys, what you're waiting for in this strategy, and obviously you do need to be using stop losses, and you do need to encompass other types of, I would say, you need to be encompassing a few other things in your strategy to make this work. But if you do a very simple EMA cross strategy on a 21, 55 and exponential, 21, 55 you can use alone, actually. You don't really need the 34, because the 34 is just in the middle. But let's just take the 34 off a second. So you can see here, guys, 21, 34 and 55 exponential moving average. You can actually take the 34 off. I actually have used strategy just with the 21, 55. But let me just give you an example. So you can see, guys, that when you do get these two moving averages crossing, you can see here, this is obviously the come because I've got another strategy on top. But let me make this really simple. You can see here, when this cross, guys, that's actually a bearish cross. So when the 21 goes beneath the 55 in this example, that's a good time for you to sell. If you got to use stop losses, you got to be looking at your order size as well for this, and looking at what your order cost is going to be. I'm going to go into that in a second, guys. I'm going to show you indicators, I'm going to show you exchanges, I'm going to show you the other side of it as well. But for now, guys, just put the 21 and 55 exponential moving averages on. When you get a cross, guys, good time to sell in this example, good time to buy here, good time to sell here. So you're looking for the cross, guys. And what you can do is you can actually zoom out and use this on lots of different time frames as well. So this is a daily time frame, guys. You can see here you got a cross. I won't draw on it because it will come up with the other. If I draw on it, it will come up with the other strategies I've got on the page. But get rid of that again. So cross here, guys, downside, cross here, upside, and you can use this strategy pretty well, guys. Actually, I've actually got some automated strategies which I've actually built with my team, which actually use an EMA cross in confluence with stochastic RSI and a stop loss, which can actually make you 1/3 more money over a certain amount of time if you leave it on an automated strategy. So very, very simple, but very, very powerful. And you can see here, guys, this is a very good, easy moving average strategy you can use. I'm not going to go through every single one, guys, because I've got freaking hours and hours and hours, but I'll just say that just to cut to the chase, is a really, really good moving average strategy you can use. Now, next one, guys, let's go into the next strategy. Let me think what it is again. So, legends, the next trading strategies or strategy is actually pattern recognition. And I would say that this is probably, as a new beginner trader, this is what most people end up learning first, because it is the most simple in a lot of respects. And also, this is something which you can use on top of plenty of other strategies. So you could be using a support resistance strategy, putting pattern recognition on top of it to give you more confluence. I'll get into that in a second. But, guys, on this screen, you can see here patterns. Okay, so charts haven't changed for thousands of years. Human emotion hasn't changed ever, obviously, with us human beings. And, what you see a lot is the same patterns playing out on price charts. Even when we look back at historical receipts from markets in the Peloponnesian Wars, the Roman Empire as well, even when we look back at receipts of price markets, we can see the same patterns come into fruition, to play. Even the tulip bubbles, like for thousands of years, guys, the charts are always the same. So pattern recognition is very powerful. And the thing about pattern recognition is this: you have to take it with a pinch of salt, because it's not 100%. Nothing's 100% guaranteed or 100% certain ever in trading. But a lot of these strategies here, like say a ascending triangle formation on Bitcoin, for instance, has about a 75% chance hit rate. Cup and handle here, you can see cup and handle. We actually do have a cup and handle formation on gold right now. You can actually see on gold a big cup and handle formation playing out right now. And actually the target for this, guys, in terms of the breakout, It's looking probably for $3,000. But anyway, you could be watching this video any given time in the future. You know, this could be 2 years in the future watching this video. But the example is this, guys. A pattern is playing out, which historically is a bullish formation, and it's playing out on gold right now. So pattern recognition is very powerful. And the good thing about pattern recognition as well is that, you know, you can use it on so many different time. You can use it on any time frame actually, but obviously the lower the time frame you go down, the less reliable. But I'm saying that you can have this strategy looking for patterns, right? So for instance, on Bitcoin, you can have a support and resistance strategy already on your charts or at play. You could even be using sentiment as well. I'm going to get into sentiment and indicators in a second. I'm going to tell you a lot about indicators actually. But you can see here, guys, that we have some sort of ascending formation playing out here. You know, this actually could, in a lot of respects, be some sort of flat triangle top. It's not perfect, I get it. I'm just trying to make an example here. But you have a flat top here with an ascending, you know, type of formation here, which could potentially end up being, whoops, what's going on here? It could end up being an ascending formation, okay, on top of already using a support and resistance strategy, okay? So you can actually use things in confluence with each other, works with EMAs as well. And what you're really looking for, guys, is multiple strategies that can be confluent with each other, a moving average support line, beautifully aligning with a support trend line, and then that's also in confluence with the volume node, where that's what you know, all these things coming together really can you can put yourself into a good situation to increase the probability of making money long term in the market. So pattern recognition important, guys. You should be using this. Now the next strategy I want to talk about, guys, is sentiment, and I would say sentiment is a strategy which I wouldn't use on its own in any respect. I'm always using sentiment analysis to give me confluence for another broader trading strategy I'm using, okay? And sentiment is this. What you're really looking for, guys, is the market getting really, really bullish or really, really bearish, or people getting really, really greedy or really, really fearful? Because historically, guys, if you look at the VIX, when in times of mass greed or mass fear, there's usually a massive opportunity, whether the market is overbought or oversold, okay? So in this example, guys, actually with Bitcoin, I look at the Binance long to short ratio. Right now, you can see here, the market is more long than it is short. And looking at sentiment analysis, guys, what you really want to try and do is be a contrarian. If the market's getting really, really hot, you want to get cold. And if the market's getting really cold, you want to get hot. You know, I don't want to you know, do the Warren Buffett quotes, but you know, you want to buy when there's fear, there's blood in the streets. That's the example. And I would actually take that further and say what you really want to be doing is you want to be buying or selling when there's extreme emotions in the market. You know, extremely greedy or extremely fearful. You can use the fear and greed index, you know, also as well. Sorry. So the fear and greed index actually is a crypto thing. I put it on the screen now, which can give you a good indication. Historically, the VIX is used in traditional markets, and actually get a lot of good sentiment stuff from Fred as well in terms of the open database sources you can get on that if you're looking at traditional markets to look at whether the market's overbought or oversold. But I would say that predominantly for me, guys, you know, I don't look at order books a lot, and you can do order book analysis, which I don't go down that road that much, but that's another strategy. We'll get into it in a second. And I would say that generally speaking, guys, you know, looking at order books in confluence with whether the market is really, really long or really, really short, that's probably the most quantifiable way to have an idea of whether the market is over the top on either side. Because, you know, if you're looking at, say, Twitter, or you're looking at social analytics, sentiment data, reading sentiment data through social media, that, you know, people can say things but do the opposite, you know. So I would say that using long to short ratios is probably the best way. And I actually use Binance a lot to do this on crypto. And that kind of segues actually quite nicely into exchanges. And then I'm going to talk about indicators and then another strategy as well. So in terms of, you know, exchanges, guys, you know, you want to be to basically be able to play these strategies out in real time profitably. You want to be using exchanges, have high liquidity, really thick order books with low slippage, okay? I'm just going to tell you what I use, guys. So traditional markets, there's a lot of stuff out there now, guys. You know, you can use stuff. I even saw this one called Webull. Looks pretty good. eToro is good for buying and selling stocks with no fees, actually. Robinhood you can use, plus 500. You know, that's a UK based one. So there's a lot of exchanges, guys. I'll put all the links below, guys, basically to all these exchanges so you can actually use them. And then in terms of crypto, guys, you know, I actually personally I trade crypto all the time now. My name is MDX Crypto, but I personally trade actually with Bybit and Phemex. I actually trade Bitcoin with Bybit and actually trade altcoins on Phemex. And I'll put the links below, guys. I know right now Bybit and Phemex are giving away thousands and thousands of dollars for free when you sign up to get an account. You literally sign up, they give you $1,000 to trade with to get you to know the exchange, you know, give you an idea of what it feels like to use the exchange. And I actually know Bybit, I know Phemex, I know these exchanges. I actually do work with them as well. And there is a link below, guys. Check out the link in the description, because that link, if you use it, I don't know what the bonus will be for you right now, but at the moment, guys, you can literally get thousands of dollars for free to use the exchanges, buy and sell. This is no joke. So I'll put the links below, guys. Get those, sign up and just get the free money, basically. The link's below. Right, easy as that. Okay, so the next thing I want to talk about, guys, is going into indicators. Now, so I've gone through, SR flips. I've spoken about moving averages. I've spoken about using sentiment and pattern recognition, okay? And now what you want to be doing, guys, is using indicators, because indicators are a good way of clearly illustrating to you without like having the actual all of the information in front of you, clearly illustrating to you whether it's momentum, whether the market is basically overbought or oversold, whether you've got divergences, okay? I actually have a very, very nice indicator you can use for divergences. I've actually got a big update coming to my specific... I've actually built a whole suite of indicators with my team, actually. I'll put up... There'll be a link below as well to that. I'll put something on the screen, but I've actually built a whole load of indicators which you guys can basically purchase for a monthly fee. It's $60 a month, and you get 4 indicators I've personally developed and designed. I'll get into that in a second, but you guys can get those, and we've got a big update coming to the oscillator, actually. But let me just whiz through some indicators, okay, just to show you how to use these. And I would say the biggest takeaway from indicators, which I've used in my strategy over the past few 7 or 8 years, is basically trying to find out when there's a switch in momentum, and is there a divergence in momentum? Because I think momentum is very difficult to calculate without a lot of different types. Momentum is something which is basically using relative strength. So how fast does the price move relative to the time? Okay, that's how you come up with the relative strength index. Stochastic RSI is stochastic relative strength, which is a more exponential version of that. TTM squeeze, another way of looking at it, and then you've got other things like the TDI. But anyway, guys, let me just I'm waffling on. So let me give you an example, guys, of how to use momentum indicators, because this is going to be a way to give you a slight bit of context. It's not as much context as, say, an Elliott wave theory, okay? Because that really will put you, where are you in the market cycle? But I would say that this can give you a slight idea of potentially where you are going to find resistance or support, or are you finding this resistance or the support at the level you're looking at, where the order book is, okay? So let's use this as an example, guys. I'm on the daily scale on Bitcoin right now. And let's just go into, okay, very, very simply, guys, momentum in terms of overbought or oversold means that, is the stochastic RSI, for instance, okay, here's a good example. This is the stochastic RSI here, guys. You see when the stochastic RSI got into the overbought territory, which basically means over 80 as a metric, okay? You can see that actually, when it crossed back over itself, and you can see if you zoom in on it, you can see that there's 2 lines, the RSI and the Stoch. If it crosses back over, that is a signal to say it's actually changing direction, okay? But at this point, it's overbought. It's in the overbought territory. I say the bullish control zone, the bearish control zone, call it what you want. But you can see here, guys, actually in this example, when the stochastic RSI got overbought, the RSI was actually overbought as well, with a lower high in terms of, we just about had a high. There's no divergence here just yet, but I'll get into divergence in a second. But you can see here, guys, that you can see when the market got overbought, it flipped, and actually that did coincide. This level here, guys, coincided with there, okay? So you can see that when the market got overbought, we also came to resistance in terms of SR. It's actually the previous high price on the micro. You can see this SR flip, this resistance level here, previous resistance, act as resistance again, in confluence with the stochastic RSI. It gives you an extra line, an extra goggles you're looking at the market to say, yes, this is in confluence, the market's overbought, take a position. And when you're looking at SR, you sell into resistance and you buy support. Perfect. I really like that. That's a very easy trade. So that's one way of looking at it, just giving you an idea of if the market's overbought or oversold. And then you've got divergences, guys. And divergences are very powerful, guys. And divergences are things which I would say is probably one of the best ways to give you to prep you or give you some sort of warning before a local bottom or a local top. Okay, divergence is really, really good at giving you an inkling it's going to happen. It's harder said than done to actually pull the trigger on it, but I would say that it's there. Now, here's an example, guys. Okay, so I'll show you how bearish divergence works, guys. So you can see here that on the RSI, I'll actually just cut this clean and just go down to the RSI really quickly. I want to make this video fast, and then I'll show you one more thing at the end, guys, to put all this into context and put this video together. You can see here, guys, that, you know, as price action from January in Bitcoin was rising, you can see we have higher highs rising here. We also have higher lows as well. You can see as price action was rising, guys, there's a divergence here. And what that divergence is, guys, is that the momentum, okay, this high here coincided with this high here. This high here, whoops, my mouse has gone a bit crazy. This high here coincided with this high here. And the list goes on. So what's happening here, guys? Price action is rising, momentum is decreasing. Okay, so as the market's going up in price, the relative strength of the market, the momentum is going down. This is a divergence, guys. This resulted in a catastrophic crash for Bitcoin, which is absolutely fine. Doesn't, you know, markets have to go up and they have to go down. It's not like a bad or a good thing whether things go up or down. It's just the market was too high. It went too high too quickly, and the RSI was spelling that out over a long period of time. And actually, we did have a big move down. So this actually is a really good way of identifying when you get some sort of divergence. That's actually a bearish divergence you have here. And the opposite of a bearish divergence would be if price action is coming down. Okay, guys, so you can see here, if price action is coming down and the momentum is going up, okay, that's bullish divergence. That means that as the price action is falling, momentum is increasing, and it's very powerful, guys. On higher time frames, I would say, even lower time frames, you know, for medium to long term time frames, I would use the RSI. For lower time frames, I'd use stochastic RSI. Having said that, you can use the stochastic RSI on higher time frames as well. I'll put all these indicators below, guys, so you can go and put them on TradingView. I'm using TradingView right now, which is an absolutely incredible service in terms of allowing traders to get a plethora of different indicators and the way TradingView has literally changed the game for traders in general. It's an amazing platform. There'll be a link below anyway. So you can see here, guys, on the weekly stochastic RSI as well, it can give you a good it can identify where you have a local bottom or a local top as well. So guys, I just want to conclude this video right now with just saying something which is really important to know, okay? And that is that not every single type of strategy is going to be for you. Do not get worried. Do not get scared. Do not get fearful, or do not get lose confidence if a strategy doesn't work for you, guys. You have to take trading. You have to make trading, and you have to create your own way in this game, guys. There is no two people the same. There are no two traders the same, guys. So you have to really think about that. Also, guys, comment below what your favorite strategy is, and do you want me to go through candlestick patterns? Do you want me to go through analyzing Chicago Mercantile Exchange order books? Do you want me to go through other things? Comment below, guys, stuff that, you know, what your favorite strategy is and what you want me to go through. There is more stuff to go through, guys. You know, candlesticks is quite simple, actually. And you know what, guys, I have my own indicators as well. But generally speaking, guys, yeah, that's kind of it. Use the links below, guys. Get the exchanges. They get loads of free money and stuff. And guys, if you want me to do more videos, just put a comment below. You're all legends. See you on the flip side. Cheers. Bye-bye.